If you're new to investing or starting out or simply want to improve your financial knowledge, then hopefully in the right place. Because the one thing we don't teach people about personal finance, the world of investing, is considered taboo to discuss. So hopefully you now take the right steps. My name is Dave and I work in financial services and I help people access their workplace pensions, a subject completely new to most people. So the aim of the videos and my finance blog is to improve people's financial knowledge and awareness so you can reach your goals just like me. I've applied these principles to become a net millionaire at the age of 52. So if I can do it, you can do it. Now let's get into the latest video. This video is about my self-invested personal pension plan. Now I do have a workplace pension with an employer, but I'm restricted. One, the funds I can put in on the contribution, so I can do my own funds elsewhere. Now the aim is an annual growth of 10%. We're looking for dividends during 2025 of £7 grand a year and a year-end value of £164,000. So how have we done the month? Well above expectations. We started at 180,940. We finished at 189,700. So month to date, profit of nearly £9 grand, and year to date, 35.93%. So well above expectations. Now we've put monthly contribution to first of the month, £500 a month, automated, and the government under the tax relief of £125 free money as a basic rate taxpayer. And our platform provides charges fees of £19.98 a month, based upon the portfolio value. So as the portfolio increased, the contributions or the fees will obviously increase, but it's done automatically. So where exactly are the funds held? Well, predominantly UK and Europe, 75.55%. USA and Americas, 22.14%, and Asian and emerging markets, 2.31%. Now we are, shall we say, investing more in America over the long term. Now during the month we received some good dividends. Total yield across our shares is 424.25%. Now, we received from our LNG technology fund £43.89, reinvested automatically in accumulation units, so the units will hold or increase in value. Done, I say, day after. We got £56.81 from Greggs, the baker, so 3 new shares. We got £677.69 from Aviva, the insurance company, so reinvested 102 new shares, and Drax, shall we say, gave us £154.97, so 21 new shares. So during the month, £934. Now, we were expecting 5833, we've got 5771, so a slight, shall we say, below schedule of £62. But as we've showed, we'll have good months, we'll have bad months, but nearly £1,000 during the month. Now, let's look at what we hold within the portfolios. So first of all, we'll do our funds and then we'll do our shares. Funds are somewhat simplified. We own 2 funds. We own a Fidelity World Index fund and an LNG Technology fund. Makes up 27% of the portfolio for £53,000. So the Fidelity World Index fund we've been topping up, we put £1 grand a month. £30,000, 16% of the portfolio. Owns about 1,400 shares of holdings, but slightly less fees of 0.12%. Has been a good run lately, but normally the last few years it's given us 10%. We just switch off, no real risk. It does for us at a 10. We own the LNG Technology Fund, £22,500, nearly 12% of our portfolio. Somewhat selective, 253 shares, but higher fees of 0.32%. And as we found out the last few years, technology funds, Magnificent is on a great run. But we've done it because we were solely, shall we say, UK based originally. Just switch off, and we are adding the funds each month on a regular basis. Now let's look at the shares within the portfolio. We own 15 shares, 12 in profit, 3 in a slight loss. Total shares of 134,138, so 72% of our portfolio, of which 64 is in the FTSE 100 and 8% in the FTSE 250. All shares we're going to keep for the foreseeable. We have no exactly shares within the foreseeable years to come. So what do we own? Well, Aviva, we own 5276 shares, £35,000, 19% of our portfolio. Everyone needs insurance, has been, shall we say, very cash lately, and as we found out, a very nice yield during the month. We own Lloyds the Banking Group, 38,500 shares, nearly £35,000, 80%, but it has been a good run lately. The results are really good, profits are up, shall we say, margins are up, interest rates are, shall we say, affecting the profits, but a long-term player. We own HSBC, 1,314 shares, £14,000, 7%. Did struggle in the month with the banking sector results, but obviously because of provision, shall we say, overseas in China. But it will pay a nice quarter dividend, and it is, shall we say, has a great run during 2025. We also own Barclays, 3,307 shares, £13,500, 7% per borough, and just, shall we say, like Lloyd's, very good results, very good trading statements, and a yield around about 5%. Now we own, away from the banks, Drax, 1,357 shares, nearly £10,000. 5% of the portfolio has great run lately, shall we say, because what's happened, the cost of living crisis or the energy crisis, is a long-term player. It's just somewhat scrutiny, shall we say, as what it invests in or how it invests, shall we say, to create energy. But as we found out, a very nice yield during the month. Now back on the insurance company, we own L&G, 2,473 shares, nearly £6,000, 3% of overall, but a nice yield of nearly 9%. Now we also own, shall we say, some retailers. We own Greggs, 302 shares, £4,900, 2.5% of borough. Has struggled lately, shall we say, because of cost of living crisis, inflation cost, payroll cost, but it is expanding the high street, shall we say, everyone needs food. But it has struggled, shall we say, but it is a very good growth company. We own Sainsbury's, 1,351 shares, £4,500, 2.4% of borough. We'll have very good results, shall we say, very soon. We'll pay a nice dividend in September. But a nice yield, shall we say, isn't a price war Vivaldi, but everyone needs food. Now we own, shall we say, away from the banks, we own Shell and BP. 150 shares on Shell, £4,300, 2% of portfolio, and BP, 542 shares, £2,500, 1% of our borough. Has had some good lately, very cash rich, dividend, shall we say, improved, and it does pay a quarter dividend, so it's some kind of cash flow to an account. Now, we also own JD Sports, 2,500 shares, £2,300, 1.2% of overall. Has been a very good buying streak in America, is affected by, shall we say, what's happened overseas, but it is making £1 billion of profit, does pay a small dividend, but it is what we see, cash rich and a growth company. It has been buying a company in America to expand. Now, some other companies we own, shall we say, is Penn and the water company has struggled, but we own, shall we say, £1,500. Everyone needs water, utilities, but it isn't a bad sector. We own AG Bar, the drinks, shall we say, producer. We put £1,000 in. It's well worth about £1,200, but it is paying a nice yield, shall we say, and it is on a buying spree. Very cash-rich company. We own AJ Bell, the platform provider. What we see as a growth company is now a major player where they invest in centres like online apps, shall we say, as an example. But asset demand increased, customers increased, dividend increased. And then finally, we own Card Factory. Has got an online presence, has been affected, shall we say, by Wahel High Street, cost of living crisis, inflation, but it is cash rich, does pay nice dividends, is expanding online, and it is, shall we say, expanding on, shall we say, the high street, but it's in a bad sector. So we just go to show we've got, shall we say, numerous shares. All long-term players, going to be here, shall we say, for the next few years. We see no need to sell, but just go to show. We've got some good companies, we've got some bad companies, but we're not going to sell for a reason. But they will pay some nice dividends. But more importantly, it's to give people hope. If I can build a portfolio, you can too. Think long term. Invest on a regular basis. Spread your assets, get shares or funds, shall we say, but do it for the right reasons. If I can do it, you can do it too. Remember, smash the like button, subscribe to the channel, and we'll see you again in the next video.